Welcome to this informational event. Basically, with deadlines approaching, which is from the 15th of April 2024, which is next year, businesses can no longer file for 2020. There are some really important decisions that now have to be made by business owners by year end, right? There are constant amendments and recent IRS announcements that leave a lot of deserving businesses, their owners, but also their CPAs, honestly, unsure about how to proceed with their ERC applications. Okay. Some businesses have filed claims by themselves. Some have filed with other parties, either other ERC companies that assist, or with the CPAs or payroll companies or whatever. And a lot of them seem not to have been correctly processed. Okay, but we've also witnessed countless cases where businesses have been advised to not file for the ERC at all, or have been wrongly deemed ineligible, either by themselves because they looked at a website, or by their CPA, okay, or simply because CPAs recommended that they are not eligible because they're worried about making mistakes because it is extremely complicated. Okay. So as a result, there have been a lot of businesses that were severely impacted that they might actually lose out on what they're entitled to. So we understand that staying up to date with the intricacies of the ERC can be overwhelming because it's constantly changing, and it can be overwhelming for professionals even. So how about lay people that try to do it by themselves, right? But it's important to make these crucial decisions right now before the deadline. So let me tell you a little about who we are so that you know that you're in good hands today. But also, give me a quick second. Somebody is requesting to record this meeting locally. You can't record it locally, Emma, but we will give you access to a YouTube link where we will post the video afterwards. Okay, so you will have access to this video for others to watch as well. Okay, so we are helping with ERC, powered by the ERC Specialists, and we are one of the largest ERC assistance companies in the US. We have 2 state attorney generals on our board. We have our very own IRS liaison officer who all ensure compliance with all the standards, but most importantly as well, keep us on the pulse of new updates. And that is so important because if new regulations or changes come in and we don't know about them, applications could be done wrong. Okay, so we also always come out on top of independent merchant reviews. That's important. Independent reviews vote us to the top. Okay, but besides that, most importantly, we have filed over 63,000 claims. We have extensive experience in navigating all of the challenges that are faced by individual business owners, but also across all industries during the pandemic, right? And also how to process their claims. And you might know if you've ever gone to a website, you know, it gives you but then what about me? Because you might have a very specific case. So we're going to talk a little bit about that as well. So I might add that we've also declined 47,000 applications. So we filed 63, denied 47. So that really shows that we not only know in detail what does qualify a business, but also that we are diligent in ensuring that we do not file who's not truly eligible. And also that we're not just, you know, after the money, but that we are actually genuinely wanting to support our clients. Okay. We also have countless CPAs referring their clients to us. And we are in really close communication with many of those over the entire ERC process. Again, that's really important because there are a lot of CPAs out there who realize that they simply don't have the capacity to constantly stay up to date with this process. Okay, so armed with this kind of level of first-hand knowledge, but also with the feedback we've been receiving and with a filing experience, today we're really offering just some much needed expert guidance and support to help you navigate through some of these complexities. Okay. So our aim for this event is to ensure that you leave with a really clear understanding of the current status of the ERC program, how to proceed with confidence, and that might be making a new claim or starting to file a new, maybe even withdrawing an existing application if that was maybe done incorrectly. And then either withdrawing it completely or maybe refiling it. Okay, so again, all of these decisions need to be done pronto. So we want to make sure that whatever stage you're in with the ERC, that you feel confident about making the choices of how. Okay. So today we will shed light on the latest updates from the IRS in the webinar that was held earlier this month, the impact all of that has on the ERC application process, but also a little bit about timescales, important deadlines, the reality of some of the eligibility criteria, which are often misunderstood, claiming procedures, but also a safe and successful application process, and a whole bunch of other information. Okay. And really exciting new topic, we'll also touch on some of the new announcements for sole proprietors who so far have been admitted from pandemic support. Okay. And we'll also dispel a whole bunch of myths that are around at the moment about the ERC. So as our time is limited today, we'll be able to take some general questions from participants towards the end. I aim to go about an hour total. Any really personal business questions can be addressed by booking a call with us. And I have already posted the contact details here in the chat in Zoom if you want to come and have a look at that. Okay, so it's already in the Zoom. So let's dive straight in. You're also welcome to type in questions into the chat as we go along, and I'm happy to answer them towards the end. So as I've already mentioned, there's been a lot of confusion and uncertainty about applying for the ERC from business owners and CPAs alike. And as we speak to thousands of business owners daily, we have an excellent insight into some of the current perceptions, challenges, but also misunderstandings. So I like to address the first thing first. Let's start with the IRS announcements in mid-September and the IRS webinar that happened at the beginning of this month. So in the webinar, the IRS asked businesses or business owners to review their eligibility, as many bad applications have been submitted. Okay. I call it bad, and I will explain why, because I don't want to call all of them fraudulent, because fraudulent has like an intent behind it, right? But there can actually also have been a lot simply due to misunderstandings of the criteria. So that's what we hear a little bit for today as well. There are over 200 pages of intricate tax law, of constant revisions and amendments. And they're hard to keep track of. I mean, try and just get your car insured and read through the insurance papers, right? So now think about an IRS document, but now think about 200 pages and constant amendments. It's very, very hard. Okay. So when asked why the applications were not eligible or bad, the IRS representative stated some reasons, and for me, honestly, they sounded like fairly avoidable points. So let me explain, and I will go into more detail on all of them in a bit. Okay. So, for example, some of the bad applications were that businesses simply didn't exist during 20 and 21. Okay, I mean, that can be fraudulent or somebody really hasn't paid any attention at all, right? For example, claiming revenue reduction when there wasn't any. That can be deliberate, but it can also be a mistake. For example, I spoke to a jeweler whose revenue reduced drastically, and he thought he had to close his business, but he had a bunch of gold and he sold that. And with that, he kept himself afloat. So even though the gold was his own, it was regarded as the inventory because it went through the business books. So his revenue had not reduced because there was a massive sale in there. So can you see? He said, okay, my revenue reduced, okay, but he had the sale of the gold in there. So he, for example, would actually not be eligible, even though he thought he was. So you can see it's not always that straightforward. Mistakes can actually be made. And most CPAs, how many clients do they have? Some have one client, some have two, some have hundreds, right? But there are some CPAs that simply do not have the experience with all these special cases necessarily either, okay? So it could have been deliberately, it could have been a mistake. Shutdowns and supply chain issues were not due to government orders. Okay, again, I will go into more detail about that later. Another area addressed was that businesses did not claim for qualifying employees. Go again into more detail about that. Okay. Also, a big one were identity check issues, that the person that applied, for example, weren't the owners. So these are all really straightforward mistakes. And these were actually the only ones that the IRS webinar had mentioned. Okay. And I will explain a little bit more. Oh, increase the volume. Okay. I will speak more. Come a little closer. I will explain a little bit more on how to avoid falling into these and other traps of an ineligible or fraudulent application. Okay, so this is one of the main things that the IRS addressed in this webinar. Okay, so they stated that if there are any businesses that are concerned about eligibility, that they should check eligibility and that they can withdraw their application. They did not give an exact date for the deadline, but they implied the end of the year. Okay, so again, it's something you got to make decisions right now. End of the year is very soon. Remember, Christmas holidays are coming up and everything shuts down. Okay, so it's important to inform yourself now. Pass on the details of this webinar on. We will put it onto our YouTube channel. We will send out an email with it afterwards. Okay. So the last thing, the IRS also warned against working with third parties that are not reputable and or with a consistent track record. Just to give an example, I've personally spoken to countless people who paid enormous amounts upfront to assisting companies and then never heard of them again. Okay, or so-called ERC companies who took just the business name, email, and a document and then filed an application with that, without applying any of the organizational qualifiers that are so important for this particular program, right? So it is these companies that the IRS warns against. Again, I will go into a little bit more detail on how to avoid these kind of companies and how to find reputable companies to work with, because they are out there, okay? So these, let's call them bad applications, and together also with a huge increase in applications as the deadline is nearing, because everybody is now rushing to get in, right? The IRS issued a moratorium in mid-September. So that's basically just a very difficult word that I actually had to Google as well, and a lot of people don't understand. So a lot of people think moratorium means death. So that, let me dispel this myth, number one, okay? Moratorium means that the IRS has stopped any further ERC applications. That is not correct, okay? It does not mean that the program is over or that no more applications will be processed, okay? It just means that the IRS put processing of new holds on end or on hold till the end of December so that they can catch up with the backlog, okay? And they will begin processing again in January. So this is why this is so important, because they will start processing again in January, but the deadline is the 15th of April, okay, for 2020 refunds. So after that, you cannot file for 2020 anymore. So that would mean a huge cut in your potential ERC refund. So the final deadline is April 2025, but it's April 15th next year to be able to file for 2020. Okay, so get all your ducks in a row now. Okay, because there will also be a huge backlog in the holiday season, etc., etc. So that was very briefly just about the IRS announcements and the deadlines. Okay, let's go into a little bit more detail about the qualification criteria. Actually, just with regards to the IRS announcements, Kyle, would you like to add anything to this?
No, I think you're doing a good job on that. With the IRS, there was an announcement the other day with the director said that the fraud that was being conducted, they've gone through, found a lot of things that they're fixing, and we should be operational soon. So that is one of the things that's going to happen in the very near future. Also spoke with some attorneys that represent ERCS, and basically they said that this was a political play. One of the reasons, let me back up for just a second. The ERCS, the fraud that was happening compared to the PPP loan fraud was like 17%. The fraud that was happening in ERC was 3%. So there's a huge difference there. Also, the attorney said that this is kind of a political play with the budget and everything that's happening this year. They said that they basically paused it because they had more businesses apply for it than what they thought were going to apply. And at that point, they were like, okay, we have all this money going out. We don't have it budgeted for this year. So we're going to pause it. We're going to sniff out the fraud. And there was some fraud going on, don't get me wrong. So that's a good thing, is to get rid of the bad actors, but then also start back up in January because it's a new budget system, new fiscal year. Mm-hmm. So that's coming from the attorneys, that's coming from the people that are in DC doing this, right? They also said if this program didn't get back up and running, there would be a bunch of businesses suing. This is coming from the attorneys, a bunch of businesses getting together and suing the IRS for this. And so that's currently where we're at. There was an announcement just the other day. I saw that the IRS was getting back up, getting running again, and going to get this thing kicked off. My assumption is that it starts first part of January. So that's where we're at.
Yeah, thank you for that, Kyle. I actually read an article on that yesterday as well. The fraud on the ERC is so small that it's nearly, it's something, if you really think about it, in the big picture, 3% is actually very little. And if you keep in mind the examples that I just gave, some of them can be straight up.
They'll stop running again by first week of January. Now everything is stopped according to them.
Yes, they will start again. Yes. They said that the moratorium will last until the end of December. That's correct. Yes.
Yeah.
So considering that the examples that I just gave, that a whole bunch could simply be, or a whole bunch of bad applications could simply be down to misunderstandings of the criteria, you know, we don't know how many fraudulence there were. There could have been some. So that's why I'm going to go a little bit into detail later on as well about how to find a good company to work with. Okay. So that was a quick summary on the IRS announcements there and the deadlines. Thank you for the addition there, Kyle, as well. So let's go a little bit more into detail about the qualification criteria. Again, we have done thousands and thousands and thousands of phone calls. And one of my favorite calls used to be when somebody said to me, we don't qualify. Okay. And then my first question is usually, oh, may I ask you why you believe you don't qualify? And there are tons of businesses that don't qualify. Again, we've had 47,000 that don't qualify. Okay. Can we have iPhone here? Could we, hang on, I'm just going to mute you. There we go. Thank you. Okay. So it's very likely that people don't qualify, but very often that's also down to a misunderstanding. So let's demystify a little bit here, okay? Firstly, we've heard a lot saying that they think that the ERC is over. Moratorium means that it has stopped, okay? We've addressed that already. It hasn't stopped. It has just been paused, okay? We spoke to tons that said we don't qualify because we didn't have 5, 10, 15 W-2 employees. Again, that is not the case. You can qualify if you just had one W-2 employee. I talk a little bit more about the criteria in a second, okay? But many marketing, call them marketing or ERC assistant companies, do not want to work with small businesses because their commission is going to be so low that they, instead of saying, sorry, we don't want to work with you, they have told tons of small businesses, you don't qualify. Okay, so if you have qualifying W-2s, you can do your application, you can file even if you just have one W-2. Okay, other myth, part-time employees do not qualify. Also not correct. You would get way less because you obviously, ERC is a refund on the taxes that you paid for your employees. So if they were part-time, you'll get way less, but part-time employees do qualify. Okay. If you did not have revenue reduction, you do not qualify. That's also a myth. There are some criteria, which means that you could qualify. I will talk about that a bit more. Just now telling you some of the myths. If you had the PPP loan, you cannot apply. Also not correct. Okay. One of my favorites is my CPA is looking into it. We're still getting that now. My CPA is looking into it. With all due respect, how much longer is that going to be looked into? The program's nearly over. Okay, now is the time either for you yourself or maybe your CPA to contact us to see how we can get this going before the year end. Okay. Another myth is we do not qualify because we only opened in 2020. Again, that is also a myth. So I will go into a little bit more detail about the qualification criteria right now. Okay, so you only need to tick one of the qualification criteria, not all of them. That could potentially also be a myth, because sometimes people seem to think that like everything need to have affected them. Okay, so firstly, let's go into more detail about the W-2s. Okay, you need to have had at least one W-2. In case you don't know what that is, because we've spoken to people that said, I had 10 W-2s, and that will then ended up being contractors, okay? W-2s are the employees that you pay taxes for and that you have 941 documents for, okay? If you have not paid taxes for them, then it's probably a 1099 contractor, okay? If you had employees, you paid them cash, and you did not pay taxes, again, does not qualify. Okay, it must be a W-2 employee, but just one is okay. As long, really important, this one W-2 is not the owner themselves or a family member. Okay, there is a slight little side note with a family member. If the family member doesn't have the same name and doesn't live at the same address, nobody really knows it's a family member, right? But we don't necessarily recommend to put that in, okay? So it's one W-2 employee that was not the owner and not a family member, okay? So really, really exciting. Tomorrow, we are awaiting an announcement, and you will get an email on that as well with the details. And book your calls with us now if that is you, because again, there will be a huge influx of applications, a huge backlog. So if you are a sole proprietor, or if you are a business that only has 1099 contractors, there will be an announcement for you to finally get some support as well. I know a lot of you have been left out. Contact us, let us know. We'll fill you in on the details. Okay. We are not 100% sure yet if that will be part of the ERC or an extra program, but it is in the coming. Kyle, have we already heard anything else on this, or do we have to be patient till tomorrow?
Tomorrow is not going to get rolled out tomorrow.
Okay.
There was some pushback. What they're doing right now is they are getting together because they did a test. Most of the sole proprietors didn't have accountants, didn't have everything kind of lined up on how to process these docs. And so what they're doing is they're staffing up in the back office to make sure that they can take in the amount and do the right work on what's going to be needed for these business owners. So it's probably going to get pushed back to next week, is my understanding, at the current time. And that's going to be able to help with those self-employed people.
Okay, wonderful. So, you know, they've been waiting for 2.5 years. 1 more week longer is probably going to be all right, but still be very excited because there is something coming for you, because it broke my heart that all the tiny businesses and family businesses so far have been ignored, and they have suffered just as much as anybody else, right? So 1W2, not the owner, not the family member for now, okay, for the ERC. So that is the base. That is, you have to have that. Next criteria is revenue reduction. So if you would want to qualify only on revenue reduction, okay, you must show a 50% revenue reduction in 2020 compared to 19. It's a quarterly program, so you have to look at second quarter of 20 compared to second quarter 19, third quarter of 2020 compared to the 19. So we always compare during the pandemic to before, okay? So 50% in 2020, but only 20% revenue reduction of 2021 compared to 19, okay? And this is your gross revenue. Very, very, very important. This is your gross revenue that you look at. Again, there were some people that looked at different kinds of sales revenues and other areas where other items were included. You're looking at the gross revenue, okay? So I mentioned the PPP loan myth earlier on, okay? So this is another case where people are often not sure if you qualify or not, okay? If you had the PPP loan or maybe other government grants, for example, if you were a childcare center, they might have had the EIDL or low-income children or various other grants, you can still apply. That is a big myth. Oh, we had the PPP loan, we don't qualify. That's not correct. In the revenue calculation that I just mentioned about the 15 to 20%, you do not include the PPP loan. But the loan information will be then included separately with the application. Okay, and your ERC will be reduced by a percentage, okay, because you got this other support, but it is still worthwhile to do the application, because even though you receive less, you can still, if you can still qualify some of the other qualification criteria, there can still be potentially a significant refund. Okay, so even if you had the PPP loan, that is not, you can still apply. Okay, Kyle, if at any time you want to add anything, you're welcome to butt in. Okay. Okay. Oh yeah. There is another myth that I mentioned earlier on, is if your revenue didn't go down, you can't qualify. That is also not correct, because there are potentially other qualifiers which can mean that you are eligible. Okay, it's not always the case. Again, this is not so black and white. It's kind of, you have to imagine it that there are lots of little tick boxes, and unfortunately to find all the correct tick boxes on an IRS website or something can be really hard. Okay, we have our state attorney generals, we have our own IRS liaison officer, we know all of the boxes, so we can really ask you all of the tiny little details to find out exactly if you are eligible or not, and where you can be eligible for. That's also why we are known in the industry to be able to increase or to maximize the refund. Okay, so you can even potentially, if your revenue didn't go down, okay, if you had a full shutdown at any time, okay, let's say you had a full shutdown in one quarter for 1 month, but out of whatever miraculous reason, you were able to make up the revenue in the next 2 months, that quarter, your revenue might not have reduced, but you suffered a full shutdown. And you can potentially be eligible for the time of the full shutdown. Okay, so this is one, for example, where even if your revenue didn't go down, you can still be eligible. Okay, let's give you a little bit more detail about the full shutdown. So a full shutdown means that your business was ordered to close down by the government. We're talking a government order. Okay, and during that time, you must have been paying your employees during that time. Sadly, we've had many cases where people said, oh, I had to shut down for 2 months. Did you pay your employees? No, they went all on unemployment. Remember, the ERC is a tax refund for your employees during the COVID pandemic. If you didn't pay them any wages, didn't pay any taxes, there's nothing to pay you back. Okay, so in that case, you would not be eligible for that particular time where you were shut down. Okay, but if your shutdown was due to a government order, then you can be eligible for that time. Okay. Let's move on to partial shutdown. So we're going to go over partial shutdown and supply chain issues now. Okay. Let me have a quick look here. Okay. So partial shutdown. Partial shutdown is something where a lot of people have been very confused about. Okay, same thing with supply chain issues. So I want to go and explain this a little bit more. I'm very happy also to take your calls if you'd like to book a call with us. If you haven't seen yet, in the chat right at the top, I've put in my contact details, also my Calendly link if you'd like to speak about your specific issues. Okay, so partial shutdown means that if your business operations were impacted by more than 10% compared to 2019 due to a government order. Let me repeat that. Your business operations were impacted by more than 10% compared to 2019. So depending on your kind of business, this can take many, many, many different forms. For example, it could be limited trading. It could be operational impact in terms of travel restrictions meant that you couldn't go and visit your customers. Okay, or that your team couldn't go on a business site to work. Okay, it could mean that maybe you couldn't do group meetings. We had a lot of daycare centers where the class sizes had to be completely reduced from 30 kids in a class or something to maybe 10. Okay, or in the entire group because of social distancing, for example. Okay, it could mean that you had to scale back hours. Restaurants, for example, maybe only had takeaway. Okay, they couldn't get people in, especially at the beginning when everybody was so worried and people didn't like to be in a close proximity anymore. Okay, anything with limited working hours, even waiting rooms being closed. Okay, anything that is a partial shutdown of your business due to a government order. You can already see a trend here. Everything is due to government orders. Okay, so I will explain a little bit more about supply chain issues because those two relate a little bit. And then I will make a conclusion for both of those at the bottom. Okay, so the supply chain issues as well. Supply chain issues basically means you having had any kind of issues receiving goods, products, any kind of items that you require to do your business, to sell or to do a job. Okay, so for example, if you were, let's say, a painter, there were many, many painters in certain states. Different states are very different, by the way. Government orders were much stricter in some states than in others. Supply chain issues were way heavier in some than there were in others. So there were some painters, for example, painter decorators and refurbishing and remodeling businesses that we've spoken to that couldn't get paint. They literally couldn't get any paint. They couldn't get paint. They couldn't get plywood. Okay, they couldn't get any of the kind of materials that they needed, and they suffered partial shutdown, way more than 10%. Their revenue went down as well. Okay, so that would be a partial shutdown. Sorry, that would be a supply chain issues. My apologies. Okay, we also had other people who, for example, couldn't get large auto parts. I personally spoke to one brake and alignment business. They had tons of cars lying around because they simply could not assemble them, because they simply didn't have the parts. A lot of the parts were stuck in the ports. The ports were being closed. Okay, so really, really important. What does not count, okay, is, for example, if you are a childcare center and you couldn't get nappies or milk, does not count. If you're a supermarket and sells Mexican products and you couldn't get your favorite hot sauce, doesn't count. It must be, again, an impact of at least 10% on your business, and it must be due to a government order. Okay, very, very, very important. So let me think. Kai, would you like to add anything to that?
No, you're doing everything that you're saying is it. The government, when they came out with this program, they made very blanket statements, right? So specifics are getting direction from the IRS is not as cut and dry as kind of like some of the tax codes. So if you have questions, if things, if you need to reach out to us for anything, reach out. Specific scenarios are different for each company, and we can really get in and take a look at the way it operated, the way that your business handled COVID, the way that the mandates were applied to your business. We can go in there and look at it on a case by case basis and really help view what we see, because we've talked to a lot of different companies throughout this and helping them get that. So we've heard a lot of different scenarios. Probably there's not a scenario that we haven't heard yet. And so if you do have questions, just reach out to us. We will definitely jump on the phone and have a conversation with you to kind of help you through that process.
Thank you. I think that's so important, that every single business is so distinctly different. I've just recently spoken to a gentleman, or two gentlemen actually, who basically, they were closed for 1 week, and in that week they had everybody come in and everybody sit down. How can we survive? And they changed their entire business operations. They changed everything from face to face. It went online. From like, I can't even begin to tell you the details of this. Okay, so it was absolutely amazing what it is that they did. Okay, so even though they had to change everything, they didn't have partial shutdown. They didn't lose any money. And I just congratulated them and said, I am extremely sad to tell you that you are not eligible. And I'm so happy that you managed to stay afloat like that. Congratulations to your innovation. But not everybody was that lucky, and not everybody was even able to do that. Right? So it's very, very important that you come and talk to us, because there are so many individual cases where some people think, I don't think that I qualify, but let's double check anyway. Okay. Or maybe you have made an application, and now from what I've just said, maybe you think that you might not qualify. Give us a call as well. Okay. One last thing I just mentioned earlier on as well with regards to qualification criteria. This is something really magical for any of you that started after February 2020. A lot of business owners are not aware that you can file. It's called the ERC Startup Program. Okay, it's another one of those things, unless you know the name of it, you'll probably never ever find it anywhere on the IRS website, because it's like several subsections and tiny little blue links. It's like this little rabbit hole, but once you look it up, you'll find it everywhere. It's the ERC Startup. If you started your business after February 2020, you automatically qualify for the third and fourth quarter of 21. It's an automatic qualification. Okay, you can get up to $7,000 for each one of your W-2 employees that are eligible, with a ceiling to $50,000 for each one of those quarters. So that can be potentially up to $100,000 in automatic qualification. So if you didn't know about that yet, again, give us a call, talk to us. Okay. Let me have a quick look what's next on my list here. Yes. So One very basic thing I just want to go over very briefly is something that very often is not being addressed either, is the documents needed. Because I've been told about people that said, I don't want to give you any of our confidential information if you're not my CPA or whatever, right? So you'd be surprised that everyone's PPP information is actually public knowledge. There's a website, you just go in there, you put in the business name, and poof, there pops up the information, right? So very, very important. The only documents that are actually needed to hand in with the application, okay, are the 941s for second, third, fourth quarter of 20, first, second, and third quarter of 21, okay. These have to be the originals or copies of the originals, okay, and a quarterly payroll report that has to be broken down by paycheck. That is actually the only thing that has to be handed in with the application. Okay, if anybody tells you, and I will tell you in a second a little bit more about how to identify questionable promoters, right? If anybody asks you for anything that has a social security number on there or an address or any confidential information, that is, the IRS doesn't want that, and you should never be sending that kind of information out. So the payroll report can be as simple as employee name, gross pay, and the check date. That's it. We don't need to know about Medicare, don't need to know about social security numbers and all of that kind of thing. Okay, very important. There is nothing really confidential that has to be handed in. Okay, we do need to know about the revenue report, and we can take you through the calculation. If you don't want to send that in, perfectly fine. We can help you doing that calculation, and we prefer to help you with that to make sure that it's done correctly. Okay, so those are actually the only documents that are required to pass in, and we need to know about any kind of loan or grant information that you have received during the pandemic. So as I was just saying, I'm going to tell you a little bit about how to identify questionable people to work with, because we want to avoid any more bad applications that have potentially come through sources that are not reputable companies, because also there have been a lot of upfront payments, and if you don't hear anymore from the people that you're working with, then you don't know what's happening with your application, and you don't know now if you need to check it up or not. Okay, so firstly, if they ask for any confidential information, it's not correct. It's not needed for this application. If you're asked to pay upfront, do not go with them. You should never pay anybody upfront for the service. We personally, our own company, ERC Specialists, we get paid after you received your check. So it's a no-risk application. You don't get the check, we don't get paid. Okay. This is also our yes.
So guys, with that, the IRS came out, and the reason we had started doing that in the very beginning when ERC was first started, we offered an option to pay up front. Mm-hmm. And then after speaking with our attorney generals and our lawyers and everything, they advised us as a company not to do that. There are certain states out there that disallow payment for government programs up front. Mm-hmm. So in order to stay compliant with that, they just put everything on the back end. And so that's the reason why we switched, mm-hmm. To stay compliant with all 50 states. Mm-hmm. So just to kind of give you some back knowledge on that.
Mm-hmm. Thank you. And this is very, very important, because if anybody asks for upfront fees, it's potentially not only illegal, but it's also probably not a reputable company. Okay, so upfront fees, no. If you want to work with somebody and they're not checking your business situation in the minutest details, if they're not checking about government orders, if they're not really asking you exactly what happened with regards to revenue reduction or supply chain issues or full or partial shutdown, if this doesn't seem like, I nearly said a proper interrogation, a proper questioning, okay, then they will not have enough information. Okay, we have a very, very rigorous checking standards and questionnaire at the beginning to make sure that eligibility is guaranteed. Okay. Not giving document standards, if they are not giving you the exact details of what documents are required. Okay, I've been working with somebody earlier on this year who said, oh, I just sent them this stuff through and then I haven't heard from them again. And then I looked at the document and said, wow, none of these documents are even, then they're not correct. They're not the right documents. Okay, so again, if you're not being given exact document standards, don't work with them. Okay. If they don't offer document checkups, we have several different stages. Firstly, it's the person that works with you. Then we have a couple more back office stages that will go through the documents to verify that they are correct and that they also match the questions of the application. Okay, so if you said you had 50 employees and actually you only give us 941s for 3, right? Well, that's an extreme case, but it's important that these checks are being made. Okay, also that the 941 totals and the payroll report totals, that it matches. Okay, all of these things we can see if something is fraudulent or if there was a mistake made. We can see that a mile before it will ever be filed. So again, we have these thorough checks which are so important. Okay. If somebody just says, yes, 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 we can file for you without going deep, or if somebody just goes for 2 minutes and says, yes, we can do this, or if they just take your application details, no, okay, or your business details, not enough, okay. I would also say if you're not being given a point of contact for your journey, okay, that you can call and that you can contact, that is very, very important, okay. If somebody is pressuring you into upfront loans, I remember at some stage we had also an offer where we were offering through a third-party loans against the ERC. We are not doing that anymore now. Sometimes it just becomes complicated and difficult with these kinds of things. But if somebody pressures you to take out a loan against a future ERC, don't do it. Okay, you want to make sure you have the money in the bank before you do anything. Okay. Not doing sufficient identity checks, super important. The IRS announced new criteria for identity checks. To sign with us is a process, like to sign the actual document, because we want to make 100% sure that we are talking to the right people, that you are the owner, that we have the documents ready, your identity documents ready, etc., etc. Again, these are all of the kind of areas where we make sure that you will have a successful application and that you don't end up in the 3 bad %. Okay. Gay just sent something. Here's a list of the best financial government order links. Thank you so much. That's amazing. Thank you for sharing that. I really appreciate that. We also have a link on the ERC Specialists website. It's really, really important to go through that. Thank you very much. We appreciate that. Okay. One other thing, if somebody does not offer you audit support, this is also something that for us is very, very important, because if the application was done correctly, if everything that you said in the application, if your documentation is correct, the reason for you to be audited is very, very low. Okay, probably the same as with any IRS business that you have. Okay, any other things that you file with the IRS. So, but still, there can be spot checks, just with any other kind of non-ERC related IRS business, right? So we offer audit support, which means that if you should get audited, we have access to the IRS back office. So we will be able to tell you if you get audited, and we will also give you access and help with finding the government orders, etc., during that process. Okay. Kyle, would you like to add anything to what I've said so far?
I would just say, guys, if you have questions about your business, if you have questions about anything that we haven't gone over, You know, we're coming up on an hour mark.
Yep.
Put them in the chats, right? And we'll try to answer as much as we can at the moment. And from there, you know, specifically about your business, like I said in the beginning, if it's specific about your business, then we can hop on the call and do that. But it's just questions about the ERC program. You know, love to hear what you have to ask.
Excellent. Okay. So I think let's just have a quick look before I wrap up if there are any questions. Does anyone of you guys that are on at the moment have questions that you'd like me to address right now?
Hi, Nancy. It's
Hi,
Michael.
Mike. Hi, Mike.
I just wanted to mention too that I had a client that said they paid taxes on the ERC, like I think it was like the amount of $30,000. And I questioned that and said, hey, you know, this is tax-free money for the program. So maybe you can address that.
We don't know that particular case, okay? The ERC revenue, the ERC refund is not regarded as taxable income, but the 941s have to be refiled. Okay, so with this particular client, I would have to speak to him and find out exactly what it is that happened there. Kyle, can you say anything else to that without knowing the exact details?
Without the exact details of that client, what I would say is, and this is what I tell all clients, when you get your ERC credit, right, it is a refund of the payroll taxes that you paid out to that to your employees, right? And at that time, that money coming back to you is going to be considered profit for those years. Now, depending on how you file, what depreciations that you took, what kind of, however it all works out for the way that your company filed, like right now, we're just talking about, you could have had a loss, and depending on how big of a loss, you get all that money back, you still don't have to pay anything out. So I don't tell people that this is all money that you'll have to, you know, that you're going to get taxed on. It possibly can. Because I don't know the specific situation. And in order to find out how much you're going to get taxed on is that you'll need to contact your attorney and say, all right, I'm going to get back, let's just call it $100,000. Where are we, and you're going to have to pay it back in 2020 and then 2021, right? For the years that you got that income. So it's all going to depend, but really need to talk to your CPA on that one for advice. But yes, it can come back as taxable income for the business.
Okay.
So hopefully that clears it up.
Yeah. So this is one of the kinds of scenarios where we have to speak to the client exactly, finding out when it is which quotas they're qualified for, when they refiled the 941s, etc., etc. Okay, so we are happy to speak to that person if you have their contacts. Okay, so thank you so much for joining. We would just like to stress to you one more time, if you do know of anybody that might like to still do the application, because again, the deadlines are coming up. We have processed over 63,000 applications. We're happy to assist you, answer questions about existing and also future applications. Please feel free to pass my contacts on. They are in the chat, you can copy it. And we will also pass around the link for this particular video so that people can watch the replay that weren't able to come and visit us today. So thank you so much for your time today, and we hope to speak to many of you soon to be able to help you with this refund in the coming months. Kyle, would you like to have the closing word?
Thank you, guys. I appreciate it. Again, we're here to help. We're not going to push you in regards to like trying to make sure you get the credit. We're here to make sure that you get what you deserve and help you through that process. Whether we get to help you or not, we just want to make sure that we provide the right direction for you in your company, and be able to do it with a company that's reputable and that has your back. right? And so that's what we're trying to do. Okay. So with
Exactly.
that, I appreciate you guys jumping on.